Hi everyone, this is Sam Silverman, Managing Partner of EB-5 Thank you for taking time to join us on today's webinar. Today we're going to be discussing EB-5 source of funds with a focus on advantages and disadvantages of using a gift or a loan as part of the funding source for an EB-5 visa investment. This is a quick overview of the different major topics we're going to discuss today. First, we'll start with a little bit more detail about EB-5 We're a leading EB-5 investment fund manager. We've worked with over 2,000 investors from more than 60 countries on projects all around the United States. We're the only regional center operator that has coverage of the entire continental United States. And we've been in the EB-5 space for over 10 years. One of the things that we're really focused on as a company is a commitment to investment transparency. We believe that investors deserve to be well informed about the program and potential investment opportunities. So we're very committed to providing all of that information as transparently as possible because we believe that's a critical aspect of making any investment, particularly an EB-5 investment. This is a map showing where many of our investors have come from over the years. Most importantly here is that people of many nationalities and backgrounds consistently find value in our investment approach to selecting an EB-5 visa project. And as I mentioned earlier, our regional centers cover the entire continental United States and Puerto Rico. And so we can sponsor an EB-5 investment project pretty much anywhere in the US. As I mentioned earlier, I'm Sam Silverman, one of the two managing partners of the firm. A little more about my background and bio is here on the left, and some more information about my partner, Mike Schoenfeld, is here on the right. So for today's webinar, we have the pleasure of having Anahita George, a top EB-5 immigration attorney who's been in this space for many years and has successfully worked with hundreds of investors from around the world, joining us today to help explain to potential investors what investors should be thinking about when they're considering using gifts or loans as part of their investment funds. So before we jump into the details of the presentation, I'll let Anahita jump in and introduce herself and share a little bit about her background and experience practicing in the EB-5 space, and then we'll get started.
Thanks, Sam. Thanks for the introduction. Hello, everyone. My name's Anahita George. We are a boutique law firm based out of Seattle, Washington. We've been doing EB-5 for close to 10 years, and we've filed over 750 EB-5 applications. We have a 100% approval track record on our 526 petitions. We've done files from India, Vietnam, Philippines, European Union, but majority of our filings have been from Indian investors from India and H-1B holders within the United States. I would say that in terms of my background, I was an accounting major from Drexel University, and I practiced tax law for a period of 4 years, which makes source of funds very easy for us. We are more in the forensic accounting business than the immigration business, and so we're very good at tracing funds, which is the gist of an EB-5 application. On an average, you'll see an EB-5 application has 3,000 to 5,000 pages. If it's any shorter than that, you either have an incomplete application or your source is very simplistic. That being said, I'm looking forward to our talk today.
Great. Thank you. I think before we dive in and talk specifically about loans and gifts, can you give us a little bit of a general overview on what is source of funds and why is it important for an EB-5 investor and kind of how it fits in with obtaining the green card? Why is the government concerned about this, and how do you fit in to help make sure this gets done correctly the first time?
Yes, absolutely. So source of funds is a core component of your EB-5 petition. The government wants to make sure two things. One, that the funds that you've earned were legally sourced. What does that mean? They were generated legally. And the second is all those funds have been taxed adequately. So going back to point number one, generated legally, we get a lot of calls where clients will say, we're going to submit our W-2s, we're going to submit our tax returns. Why isn't that enough to indicate that we've generated legal funds? There's a concept of maintenance of wealth. So the government wants access to 7 years of bank statements, indicating that you've been receiving this income and you've maintained those funds, either by way of investments in equities, real estate, or in your bank accounts. So the government wants to see continuity. What you can't do is say, I've made $800,000, last 3 years of tax returns demonstrate that. Here's my bank statement, and the government sees $800,000 coming in from somewhere, and then you're investing $800,000 in a project. That will not do. Government's going to want to go back and try and understand how you accumulated that $800,000. To simplify it, I always tell my investors this is an exercise in forensic accounting, and if it's not done properly, you will get a rejection or an RFE. On average, USCIS officer has 8 hours to look at one petition. We're talking 3,000 to 5,000 pages, so it's extremely important that the story that's told to the immigration official is easy to understand, easy to read, well written, and has minimal errors. Any file is going to have some level of errors, but trying to keep presentation simple so the officer who has to read a printout of that file is easily able to understand that source. We recently received 2 2021 approvals for 2 of our investors that we'd worked with on a direct project with EB-5 affiliate network, and those petitions were approved outright without any questions asked on the project or source of funds. And both those petitions had an average of 3,200 pages.
Got it. Got it. That makes sense. How do you present all of this information to the USCIS officer and make it so that it's easy for them to follow, easy to understand? What does that presentation look like, and how do you work closely with the client to put that together, and how long does it take?
Yeah. I'll go backwards to say how long it takes depends on the complexity of the transaction. For any money that's generated within the US, it takes about 2 weeks to complete the source of funds. The way we work with our clients is we give them access to a Dropbox portal where we have them download every single bank statement for the last 7 years, their tax returns, their W-2s, and those are uploaded to Dropbox, and then we go through the data mining exercise. To make this easy for USCIS, we don't just dump the bank statements on USCIS. What we tend to do is we tend to combine those statements, highlight the income that was generated, have an Excel table on the top. That way, what it does for the officer is they don't have to go through every single page of the bank statement. They can check, hey, Anahita said that on October 13, 2021, the petitioner got $200,000 in bonus. Can I find that entry? And if they can, it's going to be more of an audit methodology. They'll look for big numbers, cross-verify, and then not question it further. It is very important to trace the path of funds. So if you have money bouncing between 4 different accounts, you will have to provide that visibility to USCIS so they understand that the other accounts aren't being injected with outside capital. A lot of the times we provide a preliminary list to the client, and that list evolves over a period of time. So when I get consultation calls and clients will say, can I have a list of documents? The answer is, well, the list of documents varies from source to source. So if someone's selling land or mortgaging their property, their list of documents differ from someone who's selling their RSUs. So it really is working hand in hand with the client over a period of 2 to 3 weeks to get this done. At least for our firm, we're a boutique firm, so we tend to be available to our clients post 5 p.m. after work hours so we can get this done. Without the client's cooperation, this isn't possible. It's a Herculean task.
Got it. Got it. Okay, that's really helpful. So we know that gifts and loans are just a portion of the potential sources that an EB-5 investor could use to fund his application or her application. Can you talk kind of generally about the 4 most common sources, and then we'll kind of dig in a little bit more to gifts and loans?
Sure. I think the most common source is just ordinary income, whether it is business income or W-2 income through employment. That is the most common one. At least in the last 3 years, we've seen a spike in ordinary income because of the RSUs that are granted by employees in the tech sector. And a lot of the clients have a big component of those RSUs liquidated in order to fund the EB-5. Number two we see is capital gains. Since the housing boom, we have seen a lot of clients doing a cash out refinance of their home, or selling their home, or doing a home equity line of credit, or they're borrowing against their stocks. What is important in this case is to understand that the government wants to see the source of the underlying asset, which means they want to see how you made the down payment on that house and how you've been making mortgage payments on that house. A common question I get asked is, I purchased this property prior to 2015. In the United States, document retention period is 7 years, so any bank statement prior to November 2016 would be unavailable. And that is the attorney's job to explain to USCIS that, hey, we do not have this document. However, in lieu of these documents, we're supplementing the record with W-2s and tax returns that predate 2015, along with a sworn affidavit that gives the government assurance that the client indeed had enough money to make the down payment. The third and the most common source we see is gifts or inheritance, money gifted outright by family. At least in our practice, we tend to avoid gifts from friends, and I'll come back to why that is, but it's mostly money from blood relatives, parents, siblings. We don't go farther than first cousins because my opinion, it fails the common sense test where the government can come back and ask, really, is this really a gift? And the third one is loan from family or friends. At least recently, again, because of the spike in interest rates, we have seen a lot of clients borrow from friends and family at the AFR rate, which we'll go into, rather than going to banks, funding institutions, because a bank may lend you funds at 9.5% versus your relative might be able to match the money market rate, which is 5%. These are the 5 most common sources we see.
Got it. Okay. So let's dig in a little bit more to what you just discussed, the minimum rate. So what are minimum interest rates, and how do they factor into the decision to take a loan, and what do investors need to really understand about this?
Sure. The most common question I believe I get about interest rates is, can it be a 0% interest rate loan? And the answer to that is no, because the loan has to be at market terms. And then the follow-up question is, how do we determine what market terms are? And we tend to look at the applicable federal rate that's published by IRS on a month-by-month basis. And then based on the terms of the loan, we pick the interest rates that's published on that table. One of the reasons why 0% loan isn't really an option is it causes tax issues. So there's an implied interest implication by the IRS, which means if your relative is saying, hey, this loan should actually be 5.18%, but you're getting it at 0, now you've made income gain at 5.18%, specifically if you reside in the United States. So the IRS can come and imply a capital gain on your income of 5.18% on the outstanding loan. And it makes it more believable for USCIS if it is at market terms that there's nothing fishy going on. So we tend to limit the term of the loan to what a market term of the loan would look like. And we do not have loan terms extending 7 years because that's the maximum period that's available on the market for a personal loan.
Got it. Got it. So basically, if you want to borrow money from a friend or relative, then that friend or relative is going to have to pay tax on the interest income that they get from the loan. And as the borrower of the loan, you're going to need to not only pay the loan principal back that you borrowed, but you're also going to have to pay back, the interest, essentially.
Correct. It would operate just as if you had a bank loan, and we have an amortization table at the end of our promissory note where the interest and the principal are broken down and the total is paid on a monthly basis. One thing I will say about unsecured loans is the USCIS tends to RFE those quite a bit. What do I mean by that? USCIS tends to turn around and issue a request for evidence asking for the source of funds of repayment of that loan. Why is that important? They want to check two things. They want to check that you're in compliance with the loan. And second, they want to make sure that the loan payments are being made using legitimate income that is taxed and legitimately generated. They do not want off-the-books transactions where the loans have been cleared in cash. So it's very important for the client to understand that both these things need to be kept clean all the way up until a 526 is approved. A lot of the times I'll get asked a question, can I just make a bubble payment at the end of 7 years? And the answer to that is, if you'd like to set up the transaction that way, you want to make sure that you're making payments on an interest-only loan, which means that you would be paying interest expense to the lender, just as if you would to a bank. You can't make zero payments on a monthly basis. That is not an option. Another concern USCIS has is really you have no risk of loss as the person who's borrowing an unsecured loan, which means you could throw your hands up. We like to advise our clients that we prefer that the loans be paid off before the 526 is approved, so there's no doubt in USCIS's mind that this loan is going to be forfeited at some point.
Got it. Okay, that makes sense. So stepping back to the four major sources, let's kind of walk through just what are some of the best practices for each category, and then we'll zero in on the comparison between gifts and loans now that we have some more information about the minimum interest rate and how that's going to be looked at with respect to loans.
Yeah, so to start off with best practices on ordinary income, it's very important to understand whether it's self-employment income or whether it's income from third-party employment. Third-party employment, the barrier of evidence to be provided is really low because it's just Google employing you and paying you versus your own business. The government usually wants to get into the background, understand where the seed capital for the business came from, what the business does, where it's located, what the website is, who the partners in the business are, provide business tax returns. So the bar is really high if the income has been generated by your own business. Capital gains, I believe we talked about this. The government wants to understand where the down payment or where the principal payment for the purchase of these assets is coming from. I will get clients saying, I'm mortgaging the property. That's my source. Well, the government's going to say, mortgaging an asset, we need to understand how the asset was purchased. Same thing with fixed deposits. If you have rolling fixed deposits like a lot of Indians do in India, you need to provide evidence that you're rolling the fixed deposit from one to the other, which means you have to request those statements from the banks. And if there's any infusion to the fixed deposit of additional capital, USCIS is going to want to understand where that additional capital came from. Gifts and inheritance. This is very important. I always have to talk the client through, explain to them that you're going to need cooperation from your friends and family on documenting the source. If there's any hesitation on your relative's behalf on providing documents, I won't provide my tax returns. I won't provide my W-2s. I'll provide you 3 months of bank statements instead of 1 year. Any of those resistant indicators, we tell clients to back off and not to use the funds for that person. Because at any point in time, the government can come back and ask for documentation pertaining compliance, like whether a gift tax return has been filed. And if the investor was unable to procure the documents first time around, I can assure you that it's going to be difficult to get follow-up documents. And the same thing applies from loan for family or friends or companies. We want to make sure that whoever you're borrowing from cooperates on their source of funds. I think before Zang versus USCIS, the debt would have to be collateralized. Now you're able to borrow uncollateralized debt, but going back to being careful that that debt is paid off before the government adjudicates the 526, because USCIS can come back and argue that funds were never at risk if you had nothing to lose on a default.
Got it. Okay, that makes sense. So now let's talk about gifts versus loans. So obviously there are some advantages for each one. So let's walk through in detail, what are those advantages and why do you see certain clients or most clients, picking one or the other? What are some of the kind of most common fact pattern situations that you see?
Yeah, so I would definitely say that we as attorneys prefer gifts because of simplicity. The reason we prefer gifts is, especially when an investor has relatives that are handing out money, is because it's very simple. You source a family member, you're done. No questions asked. As long as the family member complies with the obligation of filing a gift tax return. In countries like the United States, the taxes are paid by donors. And so as long as those compliance requirements are met, which we can go into a bit deeper ahead, gifts are easier source. There's flexibility. The one thing I do caution clients against is gifts from friends. We have had 2 cases in which the government questioned whether it was a legitimate gift or not. And in order to make that story more believable, we had to go back to the investor's relationship with the friend. In this case, we had evidence that they were in high school together and that the friend is a high net worth American citizen and that this was genuinely a gift and there was a gift tax return filed. We tend to shy away from gifts from friends because it fails the common sense test. Going to loans are a really good source if the party who's giving you the money is clean and if you are a high income earner, which means you will have no problem documenting repayment of that loan. Loans do not particularly work well for people that have no income, which we can talk about in cons, but it's very simple. Keep the terms of the loan simple. Make sure that you're abiding by the AFR interest rates. Make sure you're making monthly payments. Make sure that the sources are well accounted for, and make sure that the repayments are kept clean in case of an RFE. When you're borrowing from unrelated parties, it is much easier to sell the concept of a loan than it is to sell the concept of a gift from someone you've barely known or someone who's a friend, especially if that friend is not a high income earner.
Okay, and so in the situation where an investor is, considering making a loan, obviously you've, helped structure, hundreds of these types of transactions. Can you help the investors with, pointing them in the right direction of, the right loan agreement, the right note, those documents that they're going to need that have been approved in the past? Do you help your clients get all of that together if they decide they want to make a loan, but they don't have, a set of documents that they've used in the past to do something similar?
Yes, so we have our own internal template of a draft promissory note and an agreement for repayment that the USCIS has approved on several occasions. So that is the agreement we put into place between the investor and the lender. As long as the investor follows the amortization table and the interest rate published on that note, we have never had pushback from USCIS on approving these loans.
Okay, great. All right, so now let's talk about the negatives, the cons. So if you're doing a gift or a loan, what are the disadvantages for each that clients need to be aware of before they pick either one?
Right. I think the biggest issue we see with gifts is the filing of the gift tax return within the United States. When the Tax Cuts and Jobs Act was implemented, the US government basically increased the gift limit tax exemption to 12.92 million, which really helped clients, disclose. Donors say that, hey, I've gifted this 500K or 800K, and it's just making a small dent in my lifetime gift allowance. Now, though, we're going to fall back once the Tax Cuts and Jobs Act expires, and we're going to go back to the old threshold of 5.49 million in gift tax exemption, which is going to make the donors a little bit hesitant, especially if they're high income earners, to file that 708. Anything on top of that as a gift is taxable. So if you're a high net worth individual and you're helping a friend out by giving the gifts, or you're helping a relative out, you might not want to use that 800,000. And we've seen instances where clients have come back and said, my relative did not file the tax return. They're not willing to file it because they do not want to use this exclusion. If the government then requests the gift tax return and you are not able to produce it, that is a basis for rejection. This is what we worry about the most. And we worry about the fact that clients will tell us it's a gift, on paper gift. We've had an instance where the client turned around and returned the money to the relative. And USCIS wanted to understand how. I'll backtrack a little bit. The lender had taken out a home equity line of credit and then used those funds to gift the money to their relative. USCIS came back with an RFE asking to show source of funds of repayment on that HELOC. When we started investigating the HELOC repayment, we noticed that there were transfers from the investor back to the lender. That negates the idea of a gift, and it becomes next to impossible to explain to USCIS why that was happening. So it's very important that if it is gift, it's not a gift in name only, especially if the lender is borrowing against an asset and handing that fund over as gift. So you need to either be in close coordination with the lender and understand what they're doing, how they're repaying those funds, or opt for a loan. On the loan front, collateralized loans are better than uncollateralized loans because USCIS knows that if there is an asset involved and the investor is unable to pay the loan, they can lose the asset. After Zhang, we've seen a rise in unsecured debt, and we worry that USCIS is going to come back and say, you have nothing to lose if you default on this loan. Yes, your credit will take a hit, but you have nothing to lose, which is why we advise your clients to pay off the debt as soon as possible. Biggest downside is the interest cost. Specifically today, if you look at the AFR rates, you're looking at 5 to 6%. That is a huge interest expense for clients. It's better than going to a bank, which is a 9 to 10%, but it is still an interest expense. What is also important is that the lender needs to disclose that interest income as income on their tax return. If that is not done, that could be a cause of worry for the lender. And USCIS also wants to scrutinize loans to ensure that they're not disguised as gifts or that the repayment terms are not something that's not available on the market, which would indicate that it's not genuine.
Got it. Okay. So there definitely are some disadvantages to either gifts or loans. So it's definitely not a clear automatic decision for clients to go with one or the other. You really have to, examine the facts and circumstances. How much income is the applicant going to make over the next few years? How is that money going to be taxed? Have they gifted money in the past or not? In terms of the person giving the funds, is it a secured loan or not? So there really are a number of things to cover before you make a final decision if you should do a gift or a loan.
Absolutely.
So that's
yeah,
important.
And we do recommend clients involve accountants in this, in both these transactions because there are tax implications. The benefit of clients that are receiving funds from abroad, say India has a tax exemption from lineal ascendants and descendants. So if your parents or in-laws or someone is giving you money from India, those donors are not required to file a gift tax return, which makes it tax-free on both ends. Recipient isn't taxed in the US on those gifts. So again, it's very important to understand what jurisdiction you're working in. Certain European jurisdictions will tax the gift, regardless of where the EU citizen is located. So the jurisdiction where this is happening is extremely important.
Great. That's really important. So now that we kind of have a better idea of advantages, disadvantages for each one, let's dig a little bit more into documentation. So for gifts and loans, what do those backup documents look like that are going to be filed with USCIS and that need to be kind of maintained in case any questions come up years later?
Yes, so for gifts, I think inheritance specifically, the government is very curious and always will ask for a will. If there isn't a will in place, you need to cite local succession rules of intestate succession. For example, in India, most clients will not have a loan. That is because the way the law is written, the funds automatically go to the widowed spouse and the kids, and it's divided equally. If that is the case, there will be documentation available, whether it's on a property. The property will say, hey, this name was entered into the property pursuant to a will, or this name was entered into a property pursuant to intestate succession rules in India. The same thing applies for United States. If there's inheritance, there will be a request for a will. So it's very important to provide that document. One important thing that I like to tell clients is when you're inheriting something like land or cash, government still wants to know how your relative purchased that land or how your relative earned that cash. Sometimes a transaction is so old that those documentation is not available. In that case, we tend to go to relatives that knew the person to get a sworn affidavit from that person attesting that all the income was generated legally. If these are your grandparents, we will ask your parents to write an affidavit. If these are your great-great-grandparents, then it's just going to be secondhand, citing local retention rules, stating, hey, none of these documents are available because they're past retention period. However, my grandfather who's alive is going to write this affidavit. You will also have to provide evidence, again, of the Form 709 gift tax return. Countries like United Arab Emirates, Middle East, where there are no taxes, it is very important to let USCIS know, to educate them so that they do not request tax returns. They do not request copies of the deceased person's tax returns or donors' tax returns. We tend to use articles by PwC, Deloitte, KPMG, top accounting firms to educate the government about the jurisdiction that we're operating in. Taxation is important. Like I said, it's important to make sure that you're abiding by local country tax rules. And then if the transaction is not old, what I mean by old is in the United States, it would have to be within the last 7 years. In India, it would have to be 10 years. Anywhere within the EU, it would be 6 years. If the transactions fall outside of that period, you need to provide a sworn affidavit of the transfer of funds. However, if it's in the last 7 years, then you will have to provide bank statements for both parties, the person who's given the gift and the person who's receiving the gift. Without those documents, if the transaction has occurred in the last 7 years, you cannot get your EB-5 approved. Moving on to loan. Loan in case of a collateralized loan. We see a lot of HELOCs. We see a lot of pledge against securities. Any underlying asset that you pledge in order to borrow funds will have to be sourced. If the purchase is made within the last 7 years or 10 years in India or 6 to 7 years in the rest of the world, you will have to provide your bank statement showing accumulation of that down payment and monthly mortgage payments. You will have to provide copies of loan agreements and promissory notes. The government is very interested in knowing what the terms and conditions of the loan agreement are. And again, as I previously mentioned, you want to keep a record of the repayment of those loans. Especially with consular processing, we have seen that the embassy tends to ask questions of the clients about what happens to the loan when they leave the country, that their home country, whether they'll continue to pay or not. And often we get requests for compliance reports on those loans. So it's very important that until that green card is printed, you have very good record keeping of loan repayments. And then if this is a not banking institution, if you're borrowing funds from a company that's not a banking institution, from relative, from a friend, then you need to source that party's source of funds just as if you were sourcing yours. You need to make sure that that person has legally earned the income and has paid taxes on it. You need someone who will cooperate to that end in order to show that. And to follow up on that, any interest payments you're making, you have to make sure that the person receiving those payments are paying taxes on it.
Got it. Okay, that makes a lot of sense. So let's talk about frequently raised concerns. So what are the things clients need to be concerned about if they're doing either a gift or a loan, and some of the most common questions that come up?
Yeah, I think for gifts, the most common question is, can my friend gift me money? And again, I tend to go back to the common sense test of, would the government really believe that your friend gifted you $800,000, right? If there's any doubt in your mind that that would not be an acceptable answer, don't go down that route. So the biggest thing with gifts is tax compliance and documenting the donor source of funds. We get a lot of pushback from the donor when we ask for documents. And in order to alleviate those concerns, we tend to create a Chinese wall between the donor as well as the investor. So what we tend to do is we will have a separate Dropbox account for the donor where they will upload documents. For example, whether it's a will or proof of transfer tax or proof of gift tax return or their bank statements or their tax returns, we will upload that in a separate Dropbox folder, and that portion of the file will be assembled in a separate Dropbox folder. The investor will consent to not looking at those documents and understanding that that is a relationship that the attorney will have with the donor. In case a relative dies without a will, you really have to go back to local country rules to prove to the government that your inheritance was legal. We've been asked questions whether clients can borrow using inherited land. Absolutely you can, but you have to go back to the principle of, if the land was inherited, how was the land purchased in the first place? Or how was the security purchased in the first place? What background do you have on the donor? Which can be hard to do if the donor is deceased. And if the donor is deceased and you have no relationship with the donor, it's 2 generations away. You have to write a sworn affidavit saying, I have second-hand knowledge that this person was legally employed or was in the farming business and has earned all their income legally. It sounds really silly, but that is the standard USCIS wants us to abide by, is to cover our basis and at least provide a sworn affidavit attesting that the funds are legally sourced. When it comes to loan, I think the biggest concern we have is the repayment of the loan. If we're able to get past the hurdle of how the lender acquired the asset or how the lender sourced the funds, the biggest issue we have is repayment of those loan funds. A lot of the times clients will say, hey, how about I sell my property in India and I repay that loan, say 6 months down the line. That is okay to do as long as you meet the 2 tests. The first test is you need to be able to source how that property in India was purchased. You need to pay tax on all capital gains that was generated through the sale of that property. If you're an H-1B holder living in the United States, you will be subject to tax in India as well as the United States, which means in India you will pay a capital gains tax. And because you're a US person residing in the United States, you'll pay a tax again. You need to make sure all that is clean before making that repayment. It's a very close relationship that we have to have with the client when a loan is involved, because we need to keep that repayment on a leash. Once that repayment is made, there's nothing we can do to fix the issue if there is any in the underlying source. So we recommend to clients that before they make any massive repayments on their loan, that they talk to us and we do the source of funds just as if we did the first time around. If there's any hesitation on both of these, gift or loan, on the opposing party to share documents, we do not use that source, because this is a 3 to 5 year relationship depending on the project you're going with. If the relationship sours or if the person stops cooperating, the entire application can be in jeopardy.
Got it. Okay, that makes sense. Before we switch over and start chatting about some of the currently available EB-5 projects, could you share kind of a little bit of an overview of what your experience has been under the new RIA rules, and clients that you've worked with and trends that you've seen, and also talk a little bit about how you work with clients who may want to get started on a new application over the next 6 to 12 months?
Yeah, absolutely. I do think we've seen a massive spike in US persons, people on H-1B visa, TN visas, F-1 visas, because of the change and the option to apply for adjustment of status. We have seen a massive spike of EB-5 investments from within the United States. With F1 clients, of course, there's a lot of foreign funds involved because those clients don't have income, and which is why in those cases, we tend to prefer family members gifting funds to the F1 student rather than it being a loan, because there's no way an F1 student is going to be able to make monthly repayments on that loan. There are a lot of questions raised around loans from India, whether you can borrow funds from India and then bring it to the United States. There are FEMA restrictions on remitting funds from India to the United States from banks. So if you're borrowing against a property in India and you're remitting that fund to, say, the United States, USCIS, if they find out that it's a violation of local country rules, can deny your petition. Same applies for Vietnam. If you do not use licensed money transmitters and you're using a broker that's not licensed to remit funds into the United States, that can be a basis of denial. So you need to make sure that you're complying with local country rules. For clients that come to us, I would say recently, because of the up and down in the stock market, a lot of clients have tax losses on their securities. And in order to cover the remaining funds, clients will come back and rely on loans or gifts. And those transactions take a little bit longer, because not only are you working with the client, but you're working with the person that's lending the money, or you're relying on the bank that's lending the money, or you're relying on the relative that's gifting the money. So we tend to beef up and say, hey, we need 2 more weeks because we need to coordinate with your relative on the source of funds. I think that we get clients a lot of times that'll have 600,000, 700,000 that are waiting to patch the gaps. And the most common mistake I've seen clients make is they'll go to SoFi or they'll go to Upstart and they'll try and borrow money from there without realizing that those loans have restrictions on investments and securities. And depending on how your offering documents for the EB-5 investment are written, they're considered investment in securities. So EB-5 is considered a security in some instances. And if you use that money to invest in an EB-5 project that considers it a security, then you've violated the terms of the rule. So it's very important to read the loan agreement and make sure that the bank or the institution you're lending it from is actually a financial institution and does not have restriction. Another surge we've seen is through these LPs that are lending out money that don't have money transmitter licenses or banking licenses. USPIS is very clear with its regs that if it is a non-banking institution, you need to source where the money came from. So recently, the founder of SoFi started a new LP that lends out money for home equity line of credit. This is not a bank, it's an LP. And so we had a client who borrowed funds from that LP, and we had to reverse that transaction, explaining to them that this is not a bank, and if the government comes back and asks us for the source, we will be unable to provide the source for the LP. So I think it's very important that before clients make the determination of gift or loan, that they talk to the attorney. Do not borrow funds. Do not start the process of investment without talking to attorney. Retain the attorney first. Brainstorm on the source of funds. We tend to take about 3 to 5 days brainstorming with our clients as to what source to use, whether a source is workable or not, whether they should be liquidating certain assets or not. We, as a boutique firm, only take a limited number of files per week, and we tend to churn those out in 2 to 3 weeks. And so we work very closely with the client. Client needs to be ready. There are clients that have been sitting with us for 4 to 5 months because they're constantly sourcing money from different sources. That is okay too, but it's much preferred that you speak to an attorney before bringing money into your account, signing a loan agreement, rather than just having all the funds in your account and then having to undo that transaction.
Got it. Okay. Could you also chat a little bit more kind of mechanically about how the process works if a client wants to, start working with you in the next few weeks, and what is you mentioned they're going to be using Dropbox to upload files. How are they going to be communicating with you, and then how is the whole package going to come together, and then submitting it, mailing it, checks, all that. How does that whole experience look like, for investors who are working with your team?
Sure. So when the investors reach out to us, the first step is, of course, we get retained. And once we're retained, we do 2 things. We set up a Dropbox, and we set up our e-questionnaires, where we're sending out information requests to the client so that they're filling out information that'll be populated in their immigration form. Simultaneously, we interview the client about what funds that they plan on utilizing, what they're planning on liquidating, when they're planning on liquidating, what the timelines are. Once we interview the client, we create a customized list of source of funds documents. Once we provide that customized list, the client will start uploading documents to Dropbox, and we will start data mining those documents. So 7 years of tax returns, 7 years of bank statements, 7 years of W-2, employment confirmation letter, cover-to-cover passports. The third step that's been added because of the adjustment of status is clients that go into rural projects, we highly recommend that they do their medical. So when the file opens in under 2 years, the government doesn't RFE us for a medical, and the green card isn't unnecessarily delayed. While we're processing the documents, we may have questions for the client. We prefer to communicate either through phone calls or WhatsApp, because we feel like email slows down our interactions with the client, and we like to do this in real time. So like I said, on any given week, we're working with 6 to 7 clients, and we will only take a new tranche of clients once those files are closed out. We will not take 20 clients at a time and not be attentive to their source. So real-time communication, real-time responses. We tend to be available off hours. So clients are usually done work at 5 o'clock. We tend to work closely with the client from 5 to midnight, especially in the tech sector. Clients work incredibly hard, and so we have to be available off hours and on the weekends for the clients. Once the file is ready, we tend to assemble our file electronically with the cover letter and index of exhibits, and we walk the client through the file so they understand what it is that we've said in our story and what it is that their story is and whether it's accurate or not. I believe there are very few players in the market that actually have a copy of the entire file that is printed and provided to the client for a review before it's shipped out. So we have our clients looking at the entire copy that's going to USCIS, being able to give us comments in real time on Dropbox or over WhatsApp or through the comment feed on Word. So we tend to rely heavily on technology. We're a young firm, so we tend to do things young way, is not just relying on emails. The one thing you will not see with our firm is communication with paralegals. Whatever attorney you're working with is the attorney who will be communicating with you from beginning to end on your process. We also are one of the few firms which make sure that we avoid RFEs. What I mean by that, in case of a gift or a loan, we like to file addendums. When there are gifts involved, once a tax return is filed, 708, 709 is filed, we like to supplement that with USCIS. If you've liquidated assets that have capital gains, we like to file your tax returns and let the government know that you've made tax compliance or your relatives made tax compliance. Similarly with the loan, we like to proactively submit documentation pertaining to loan repayment so the government doesn't have a chance to RFE. Before they RFE, they understand that the client has paid off the loan and there's a no-due certificate available. And all those funds have been paid using legal income. So we try and be proactive, especially for Indian Chinese nationals. It's very important that we go out of our way to avoid RFEs because retrogression can hit anytime. And once it's all done, we tend to send the file to FedEx. We solely rely on FedEx because of their guarantee shipments. FedEx prints the file. Like I said, any file on an average is 4,000 to 5,000 pages. FedEx will print it and then it will be shipped through FedEx either overnight or 2-day guaranteed delivery. We want to make sure that we save a couple of things. Proof of delivery, because there have been instances where it's been delivered and a receipt notice has not been issued. Proof of check cashing, right? We like to save a copy of the check that was used to make the payment. We want to make sure that the files don't come back if kids are aging out. So there are some best practices that we like to follow. And so no administrative errors happen on our end. It's a very close process where we work closely with the client, and we tend to sign the clients up for text message notifications. So via text message notifications, the clients will know that their file has been accepted and their receipts are being processed, and this information directly goes to the clients, which gives them a sense of security. So we tend to work a lot in real time. We do not have a giant pipeline where you're waiting for 6 months for us to work on your file. If we've said it's going to get done in 3 weeks, it's going to get done in 3 weeks if the client cooperates.
Got it. Got it. I know in the last, few years, you've had quite a few investor clients who, started out working with a different EB-5 immigration attorney or just a different immigration attorney, and they weren't happy for one reason or the other, and kind of ended up switching and choosing to bring you on to help fix mistakes or because things weren't getting done. Can you kind of talk a little bit about what that's been like and what are some of the most common issues that those types of clients have brought up, and why they've kind of switched over to working with you?
Yeah, we have a lot of clients that have switched over in the last 3 years. Specifically, number one complaint we get is, I've been waiting to get this file for 6 months. And every time I produce a document, the attorneys come back and say, well, you're missing this document, you're missing that document. Clients are happy to providing our experience documents because they want to make sure that their cases are tight. However, there's a lot of delay and lags with the big firms because they're more volume shops, right? So we hear a client say, I send out an email and then I don't get a response for 2 to 3 weeks. Or we will hear clients say, I've never spoken to the attorney since I paid the retainer, and the clients want to talk to the attorney. We've often seen that a couple of big shops tend to outsource their source of funds work. What do I mean by that? If there is a big firm that does not understand how to do Indian source of funds, instead of declining to take the file, they take the file and they'll outsource that source of funds to another attorney. And so the client ends up not just communicating with the first attorney they retain, but also the second contractor that's working on the case. And things get lost in translation. So I think it's very important that when clients are retaining attorneys, that they talk to them, that they understand what the expertise of the attorneys are before signing up with them. There are clients who really like big law firms, but then come around and will say, hey, I would like to get a response, or I would like you to tell me when things change, when rules change, or when USCIS is issuing 5-year EADs versus 2-year EADs. I want to make sure that I can contact my attorney if I'm going to travel abroad. The biggest issue we've seen is inadequate documentation through RFEs. So we have worked on a ton of RFEs that were issued to other law firms where documentation wasn't done correctly, or incorrect documents were submitted, or it was just inadequate. The biggest issue we have in those cases is most of these attorneys don't retain a copy of the file that was filed with USCIS, which leaves us guessing as to what was filed the first time. We need to be careful because if we contradict what was said in the first instance, there's perjury involved. So I think it's very important for all the clients listening to the webinar today that before any file goes out to USCIS, you absolutely get to review what is being filed in your name, and you absolutely have a copy of the documentation that is being filed, because without that, it's going to be impossible for any attorney to respond to an RFE and not contradict what was previously said. And in the end, I say, usually dollars cost is a big factor for a lot of clients when they're signing up. And I like to tell my clients, I'm not the cheapest attorney and I'm not the most expensive attorney, but I am the most attentive attorney. So if you tend to go for that very cheap attorney that's doing source, that's way below market rate, you're going to get 50 pages versus a 5,000 page application. You're going to have to wait 6 weeks in order to get a response to that email. Or you're working with someone who doesn't know what EB-5 is and what it entails, which is why they're charging such a low amount. So it's extremely important to make sure that you vet the background of the attorney. You try and understand that the attorney isn't specifically in bed with the regional center or isn't representing the regional center. And it's important that the attorney be very proactive and respond to your questions, because sometimes there's just no time. Recently, we've seen a lot of layoffs and there are loans involved in those transactions. And the client will call us and say, I've gotten laid off, there's a loan involved, I need to keep paying these loan interest and principal payments. What can I do to remain in compliance, right? And then we have to come up with a strategy on how to pay that loan without a default, because that would cause issues on source of funds end. So you really need someone who's able to communicate with you, who's looking out for your best interests, and who also understands what source of funds is and what EB-5 is.
Got it. All right, that's really helpful. So now we're going to shift gears a little bit and chat about two currently available EB-5 projects and some of the differences between them. So first, we'll spend a few minutes talking about our Twin Lakes, Georgia rural EB-5 loan project. Twin Lakes, Georgia is a rural project located just outside of Atlanta that's building single-family homes. The project is being developed by the Coulter Group. They're one of the largest developers in the Southeast United States, with almost 200 completed projects and over 24 billion of in-process and realized development. The Twin Lakes project follows 15 prior Coulter EB-5AN projects, all with 100% USCIS approval and funds repaid or in good standing. One of the things we talked about earlier is the new adjustment of status policy under the Reform and Integrity Act, which went into effect in March of 2022. Anahita, can you talk to us a little bit about what that adjustment of status rule change is and why it's really important?
Yeah.
And I believe this was your client as well. Maybe tell us a little bit about what his situation was and why it's really helpful, particularly in the case, if there's been a recent layoff and how that works together also with the travel advanced parole.
Yeah, so prior to the Reform and Integrity Act, one could only adjust status after their 526 was approved. The best thing that the Reform and Integrity Act did was, just like other categories, if they're current, you are now allowed to adjust status with your 526 application if your country is current. So for example, if you're an Indian national filing from within the United States and you're on an E2 or H1B or F1, you now have the ability to file for adjustment of status for work permit and travel permit along with your EB-5 application. The beauty of this is that you are able to get a work permit. Our median timeline has been 4 months. We recently also had a case where a client received their work permit in 30 days. Things like that happen. Travel permit takes a little bit longer, but it really frees the client from their H1B, gives them the ability to do business. For a lot of H1B clients that are new to the EB-5 game, I've noticed that there is this fear of letting the H1B go in case there's an eventual denial on EB-5. I always tell my clients this: if I'm looking at a file and I have done your source of funds, I can tell you with certainty whether it's going to be approved or not, or what percentage chance there is on an RFE, because it's an exercise in math, and math doesn't lie. So if the math ties, there's no way you get your I-526 denied. I have a lot of tech clients that will take the travel permit, that will take the work permit and leave it in their back pocket and choose not to use them. Again, The benefit of this is you can continue on H-1B, and if you then get laid off, you have the ability to switch to your EAD and continue as if nothing was happened. With a looming recession or tightening credit conditions, we have noticed that employers are unwilling to sponsor H-1B or TN visas, in which case an EB-5 gives absolute freedom to the investors to be able to work or do business or not work in the United States. While your 485 is pending, you have the ability to do whatever you want. The good news is recently USCIS started issuing combo cards again. And in issuing those combo cards, a lot of the clients have received 2 to 5 year combo cards for work and travel permit, which is a great benefit. You have, just like a green card holder, the ability to work in the US and to travel as much as you'd like using that card. The benefit of Reform and Integrity Act was that it just didn't apply to new I-526E petitions, but we worked very closely with EB-5 in 21 and 2022 to file a lot of direct investors, and all those investors from 2018 to 2021 benefited because of this rule change, because we were able to adjust status for all of them once this law was passed in March. And so I think that that has made EB-5 very, very appealing to a lot of Indian clients. For this client, and for a lot of clients in particular, off late there has been looming fear of layoff, or we've had clients that we've been in the middle of filing the EB-5 application and have been laid off. For all of those clients, this is really good. The one advice I like to give my clients is file as soon as you can. Take out that loan as soon as you can, because once you're laid off, you will not have the ability to borrow that loan like you would if you were employed. So if you're on the fence thinking about doing this, make sure you have that loan paperwork ready. Talk to an attorney so that you can pull the trigger and borrow the loan funds to get this done. Because once you're unemployed, no bank or financial institution is going to want to give you a loan, and no related party can give you a loan that will look like it's an arm's length loan.
Got it. Okay, that makes sense. So a little more information about the Twin Lakes, Georgia project. As I mentioned earlier, it's a large single-family home project for active adults, so 55 and up, to buy a home there. Coulter's built thousands and thousands of homes over the last 30 years. This particular project has 1,300 homes total. Almost 600 have already been sold. Because the project is located in a rural area, it qualifies for the priority processing for I-526E approval, and also gives investors access to the 20% reserve visa set aside, which is really beneficial, particularly for investors born in China or in India. Another important aspect of the project is its job creation. In total, the project creates almost 7,000 jobs, but given the advanced state of construction, thousands of jobs have already been created, which means that there's more than enough jobs needed for each of the investors already, which is really important from an immigration risk perspective for the investment. Another kind of general thing to keep in mind is historical success and experience. So the Twin Lakes, Georgia home project is one of 13 identical communities being developed by Coulter around the southeastern United States. And so not only has this business model, been proven to be successful so far at Twin Lakes, but it's also been implemented successfully at many other locations in the same region of the country. The project features 3 unique safety guarantees for investors. Each of them is being provided by KL Holdco, a very large Coulter parent holding company with substantial assets. A loan repayment guarantee securing the repayment of the funds at the end of the loan. An approval refund guarantee in case an application gets denied for any reason, funds get repaid early. And a job creation guarantee to make sure that the funds are spent on EB-5 eligible job creation activities. As I mentioned earlier, the project is just outside of Atlanta, Georgia, so very easy for investors to come and visit. about 1 out of every 4 investors does come for an in-person site visit, and we strongly recommend that. And if you are interested in making a trip to Atlanta for the day, we can definitely arrange for you to see the project. But for those investors who can't come to see it in person or who are outside of the country and can't make it for travel reasons, we do have a new virtual driving tour video available on our website that you can see to get an idea of what the project looks like from a bird's eye view touring the neighborhood. And these are a few recent construction progress photos, so you can see some recent activity happening at the project. And also on our website, we have a number of EB-5 investor testimonial interviews, so you can hear from a number of investors explain why they decided to invest in the Twin Lakes, Georgia project after evaluating different available EB-5 projects on the market. And lastly, before we wrap up, I'll spend just a few minutes talking about our new Boynton Beach urban EB-5 preferred equity project. This is another project also by Coulter, the same developer of the Twin Lakes, Georgia project. But this is an urban project, so it's located in an urban TEA in South Florida in Boynton Beach. And this project is a little bit earlier on, so construction is starting in the next few months in early 2024. And because it's earlier on, we've been able to structure the project as a preferred equity investment with a much higher return of 5% per year, or $40,000, 5% times 800,000. And the reason we've been able to do that is because, again, the project is earlier on in the development cycle, and it is located in an urban area, which means investors do get access to the 10% visa set aside, but there is no priority processing because it is not in a rural area. The project also features a short investment timeline. So the business plan is to build, rent, and then sell this apartment building once the business plan has been executed. So build, rent, and then sell. And Coulter believes that process will take approximately 3.75 years. So this project, again, has a shorter investment timeline, less than 4 years, and a much higher return. But you're going to be waiting a little bit longer to receive the green card because the project is not in a rural area and so is not going to get the priority I-526E processing. These are a couple of kind of summary points to keep in mind. Again, 5% annual return is very competitive in the market today. Shorter investment timeline. The location of this project is very advantageous. It's an urban infill location. Everything around the project site's already been developed. This is kind of the last remaining large piece of land to be developed. And it's right in Florida's Gold Coast, which is kind of the most affluent part of the entire state. And it's being developed by Coulter. Again, over 30 years, Coulter's never failed to repay a loan or complete a project. And the land for this project is already owned, and almost all the permits are in place, with construction starting in just a few months. So this is a good option for investors who are already in the United States and who could benefit from the adjustment of status. Anahita, do you want to share a little bit more information about the type of profile of client that may be more interested in a project like this compared to the Twin Lakes, Georgia project, which I know you've worked with many clients who've gone into that project, but the Boynton Beach one is brand new. We just opened that a few days ago. So yeah, let me know what you think.
Yeah, absolutely. So we do get a lot of inquiries from clients that are within the United States that do not mind waiting longer for their green card. We've heard from a lot of clients that they would prefer to get their funds back sooner, and they would prefer a decent return. And the reason clients prefer that is a lot of clients take on a heavy debt load in order to fund their EB-5. So if that is the case and they don't mind waiting, If they're in the US, they get the benefit of work and travel permit, which is just as good as a green card. They get their money back sooner, and they're getting this interest income, which can help offset the debt that they're taking on to make this EB-5 happen. Those clients are, in my opinion, a right fit for this project. It doesn't matter, like I said, outside of India and China. Clients outside of those countries would also be good candidates, because those clients will not see a significant benefit of going to Twin Lakes and getting processed under the rural category. As you know, Sam, we recently got an approval for a Pakistani investor for 2021 and file. I mean, that's a regular line, and it was just 2 years. So any client that's not from India or China should consider this project, because they're not looking at long wait times. And anyone who is from India or China and wants their money back sooner, is relying on debt to fund the EB-5, and doesn't mind waiting on work and travel permit, would be a good candidate for this project.
Got it, got it. Whereas, let's say an investor who's based in India or based in China, that client is probably going to be a better fit for the Twin Lakes project, because it's rural and they're not going to be able to get the benefit of adjusting status and getting an interim work and travel permit. They're going to have to wait until they actually get the green card. And so because of that, those clients are probably going to be more interested in a rural project like Twin Lakes, whereas projects, like the Boynton Beach are going to be, better for non-India, non-Chinese clients, and those who are already in the United States and who can, avail themselves of the work and travel permit.
Absolutely. We have seen a lot of interest from India as well for clients that have kids that are very young, 3 years or 4 years old, and they're doing this for their college. So they don't have any issues waiting, because that's a win-win for them. They're getting 5%, they're getting their money back in close to 4 years, and they don't even want the green card for the next 10 years. So those clients are really good candidates, and we've seen a spike in those call volumes.
Got it. Okay. All right. I think that pretty much covers all the major topics we wanted to cover today. So I think to wrap up, what are your kind of, top 3 pieces of advice for investors who are considering, doing an EB-5 investment? What do they kind of need to be aware of and be thinking about? And then, if they are interested in, setting up a time, to chat with you initially to see, if working together is a good fit and if they could even qualify for an application, what does that next step look like for them?
I have the most important suggestion I have for clients is that they should talk to an attorney first before they go project hunting, because a lot of times clients will come to me and they will have no idea what it is to look for. And as an immigration attorney, it is my job to educate my clients, whether the client is willing to take some risk, no risk on immigration front, how to assess a project, how to assess whether the project is fully funded, whether there's immigration risk involved. All these questions can be answered by the immigration attorney that you're working with, and what criteria you need to set when you're evaluating a project. So that is my biggest pointer to clients is, if I were an investor today, my recommendation is find your attorney first, then with the attorney's guidance, start scoping out projects that may work for you. Second suggestion definitely is do not liquidate, do not move money, do not make any moves without talking to an attorney. And final point is, we do get tons of requests for consultations from clients, and we're happy to provide that, but we also tend to have very busy seasons right as the fiscal year ends. So what I mean by that is when October kicks in, October 1st, USCIS's visa quota, DOS's visa quota resets. At that point, H-1B holders, L-1 holders tend to notice that the visa dates aren't proceeding fast enough or aren't moving forward at all. And so they tend to fall back on EB-5. During those months, which is October, November, December, January, it's usually a very busy time. So if clients are looking to kind of file EB-5, I think January, February, March is kind of known to be a lull period where clients will get more attention from attorneys. But as you come closer to, the reset of the fiscal year, attorneys are going to be more busy. One suggestion I do have for clients is I'll get questions over email asking legal source of funds related questions. It's very difficult for us to answer those questions over email without understanding your background, without understanding the background of the donor, without understanding where you're looking to borrow funds from. So I think that my recommendation to clients is you reach out to me, try and schedule a 20-minute consult, give me some background so I can then understand what your source is and give you guidance accordingly. Do not send questions on, my mother's giving me a gift, will that work? Well, I wouldn't know the answer to that because I would have to know where your mom's getting the money from, what asset is she liquidating? So it's an in-depth discussion that takes time. So I'd recommend sending a WhatsApp if you're ready to pull the trigger, scheduling that initial consultation, and then getting the ball rolling on the process.
Got it. One last point I want to make before we wrap up is that selecting an EB-5 immigration attorney is really critical, and it really is the first step in the EB-5 process. There is no one size fits all. An investor, from France who only speaks French is probably going to want to work with an EB-5 attorney who speaks French and who's done a lot of applications with sources of funds from France, and vice versa. An investor from India, who has documents pertaining to transfer and sale of property in India should be working with an attorney that's done a lot of transactions involving funds coming from India and property being inherited or sold in India, right? So you've got to really kind of look for the right attorney that has the experience working with investors with similar sources of funds, and who's going to be responsive and professional and be able to guide you through the process. At EB-5AN, all of our projects are open with respect to attorneys. So unlike many other EB-5 regional center companies who require investors to use one or two attorneys only, we don't do that. We want everything to be fully transparent, and we believe in freedom of choice. So as an investor in any one of our projects, you're free to select any EB-5 attorney that you like. There is no restriction whatsoever. Obviously, Anahita has worked with many of our clients, and we've heard nothing but good things and compliments about her team and her work. So we highly recommend clients who are considering doing an EB-5 project to speak with her. And it is always a good idea to chat with one or two attorneys just to get an idea of what the different personalities are and what the different timelines are. As Anahita mentioned earlier, some larger law firms can take months to get things completed, and that may be okay if you're patient and you can wait months for an application to be filed, or it may not be. So it's just important to kind of understand not only cost, but also timeline, responsiveness, and experience. Did I miss anything else in there, Anahita?
No, I think I really like the fact that you always introduce clients to multiple attorneys, because anyone who talks to me has always said I've talked to 3 other attorneys, and I really prefer that because they can see the difference in styles when they're following up. And the one thing I do appreciate about some of the regional centers like yours is not forcing an attorney. I have seen cases where clients have to beg the project in order to have me represent them. And that's not okay to do. It shouldn't be that. I am the investor's attorney. I have never represented a project or a regional center in my life, and I'd like to keep it that way. And so I feel like the client should have the choice of who they want to work with. Whether there's any conflict involved or not is something that the client should definitely investigate. So it's very important that the client does talk to 3 attorneys and make sure that they talk to attorneys that are also not recommended by the regional center to see the difference in what they're getting.
Great. Thank you very much. That was super helpful. And again, if you are interested in exploring an EB-5 investment and getting more information about the source of funds and what your application could look like, please reach out to Anahita. Her WhatsApp and email and website are there on the screen. And for any questions about the projects, about Twin Lakes, the rural EB-5 loan project, or our Boynton Beach multifamily project with a higher investment return, please reach out to us, WhatsApp or email, or visit our website, and we'll be happy to get you more information about any of those projects or other projects that we have open. So with that, thank you again for taking time to listen to the webinar, and we look forward to working with you in the future.